I do, because last night on Truth Social, Trump posted some interesting comments that has implications for stable coins. So let's get right to it. I'll be quick. Jen, if you can put up that first slide that shows Trump's posts. Okay. So the issue is that the Clarity Act, which is sort of an add-on to the Genius Act in how stable coins and crypto are going to be regulated going forward. The Clarity Act has been caught up in disagreements between the banking industry and the crypto industry. And obviously, Trump wants to push the Clarity Act through. So here are his posts. He said, they, i.e., the banks, need to make a good deal with the crypto industry because that's what's in the best interest of the American people. So he's pushing for this act to be passed. Um, he's saying that the banks should not be trying to undercut the Genius Act or hold the Clarity Act hostage. So he's blaming the banks, obviously, for the delay. Um, Now, here comes the important points. The banks, according to Trump, are hitting record profits, which is actually true. And we're not going to allow them to undermine our powerful crypto agenda. Now, keep in mind, his sons are very involved in the crypto world through, their Liberty Financial venture. And, Trump also had a big constituency in the crypto crowd that helped him get elected. So he's beholden to the crypto world. And so now we come down to the crux of the disagreement. Americans should be able to earn more money on their money. What he's basically saying there is we should be allowed to pay interest or give rewards on stablecoin balances. And that's where the real debate comes in between the banking industry and the crypto industry. Is should you be allowed to pay interest on balances as opposed to just transactions? Right now, some of the coin bases of the world, the stable coin companies are paying rewards on transactions, but not on balances. And if they are allowed to pay interest on balances, you're going to hear this huge sucking sound out of the depository institutions into stablecoin. And that's significant because it's going to take liquidity out of the system, at least the banking system. We've seen this once before in history, back in the late 70s, early 90s, when money market funds were introduced. And it created fairly significant dislocations and rate wars. And it was disruptive to bank fundamentals. So I think we're moving in that direction again. And we'll see what the implications are if it's passed.